Just a standard risk disclosure before today's video. I'm not a financial advisor or trading expert. I'm simply a trader that likes sharing a bit of what I know. Trade at your own risk. I hope you enjoyed the series. Hey, welcome to my sixth video in a series I'm calling Back to the Basics, where we'll work on covering all of the basic fundamentals needed to start trading futures. From beginning to end, I want these videos to be straight and to the point, focusing on all areas of knowledge needed to start taking trades and build that confidence within yourselves. In the last episode of the series, we talked about how to identify trends, support and resistance levels. We talked about drawing those trend lines and channels. For today's video, I want to specifically talk about how I count legs. Now, I do have an indicator on my chart that helps me do this. That's what these little 2s are, and the Fs represent failures. And we'll talk about all of that in today's video. But this second entry indicator, there are many on the market. I cannot advocate for just one. This is not a sponsored video. The one I specifically have is from Thomas Wade. You can also get one from MAC, Price Action Trading System. You can get one from Buy Buy Money. I'm sure there are a number of them out on the market, but this is just the one I specifically use. Now, if you don't want to buy an indicator, what you can do is literally just have a text box and put 2, change the color of one to red, the other one to green. So now you have a 2 and a 2. And when you're manually counting the legs, you can just continue to shift these numbers so that as you're counting legs, this is a 2, and this is a 2. We'll go ahead and talk about that. I just wanted to get that out of the way, that you can manually count these numbers and put these numbers in to help you analyze the market a little bit better. So in the past few videos, we've talked a little bit about candlesticks and what they represent. When you see these green candles, we're in a bullish uptrend. And when you see these red candles like this, we're in a bearish downtrend. Now, right off the bat, I'm going to tell you the way that you get better at this is just through repetition. And it'll make more sense as we talk about it. We'll go through a number of examples today. So when we're counting legs, let's just say we're counting from the top of the swing right here. This is the highest point in the most recent price action here. This is the highest point. Prices are coming down, coming down, coming down, and they continue to come down. And as soon as prices tick up above this previous candle, that's a first entry long because prices are trying to go up in a bullish direction. Now, the color of the candle doesn't necessarily matter. It really has to do with that wick. So if we start from the top here, this is the top. As prices continue to print, we're looking for the candle, the next candle, to break the high of the previous candle. So did this one break the previous? Nope. Did this one break the previous? Nope. Did this one break the previous? Nope. All the way down until we get this candle. Did this candle break the previous high of this candle? The answer is yes. So we have a new high, prices come down and up for a first entry long. Then prices continue down, looking for a second entry long to trigger. And you'll see this number 2 is getting ready. We're looking for a second entry long to trigger. There's the second entry long. A high broke above the previous high of this bar. So new high, prices come down. First entry long, prices continue down. Second entry long as it triggers above the bar. Now that was a second entry long, right? Now I want to see if we can find a second entry short. And this is the way we're going to do it. Prices made a new low here. This is a new low in the previous price action that we have. This is the new low. So this is where we're starting the count. Prices are coming up. And what are we looking for? We're looking for prices to break the low of the previous candle. So as prices continue coming up, there is a first entry short. This is the new low. Prices continue to come up, come up, come up. This bar prints and it breaks the previous low of this candle. First entry short. And prices continue down and then they hold at the 21 EMA. They continue up. We're looking for a second entry short. That means the next bar that breaks the previous bar candle's low, that's going to be a second entry short. So prices are continuing up and prices break the previous candle right here. That's a second entry short. So if we just have this candle, do we have a second entry short yet? No, because this bar did not break the previous low of this candle. But as the next bar prints, this bar does break the previous low of the candle. That's a second entry short. New low, first entry short, second entry short. Over here, we had a new high. Prices come down. First entry long, second entry long. So that's pretty clear cut. Now, it's not always going to look like that. For example, now that we have this new high here, prices come down and up for a first entry long, and now prices are pulling back, and now we're looking for a second entry long to trigger. You see second entry long triggers right after the previous bar here. So new high, first entry long, prices come back, second entry long, trigger above the high of the previous candle here, second entry long. As prices continue to form here, we have this new low. This is where we're starting to count. New low is prices are continuing to push up, prices coming up, coming up, coming up, coming up. Looking for a break. There's a break by 1 tick. You can see that's a first entry short. So new low, prices are coming all the way up. Each bar does not get broken. It continues to make highs, 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 highs. Here we have a break. So that's a first entry short as prices come down. Prices come all the way up. And now a second entry short is getting ready. And boom, there's a trigger of a second entry short as it falls below the previous candle's low. Second entry short. Now let's talk about failures for a second. We still have to start the count. So we have a new high all the way up here as prices come down and up for a first entry long as prices trigger first entry long for the first time. Then prices continue to fall. And now they're pushing below this 21 EMA here. They're pushing below our moving averages. We're looking for a second entry long to trigger. There's the second entry long that triggers. Now, if prices do not continue up and they reverse, that's considered a failure. So when we get a second entry short, for example, back here, we had this new low, first entry short, second entry short. You can see prices continue to fall until they reach the 21 EMA, at which point they fail. There's a failed second entry short here because prices fail to continue lower. So for this example here, prices fail to continue higher, at least temporarily. Prices come back down before pushing back up. So a new high, prices come down and up for a first entry long. Prices come down up for a second entry long that fails, temporarily at least, as you see this bar breaks below the low of this candle before continuing on. Now, what you're going to find in trading is the counts aren't always going to be perfect. And what do I mean by that? Well, look what's happening here. This is technically the new low. So prices came up and down for a first entry short. Prices reversed, didn't quite tick higher than the previous candle, but then prices come down for a second entry short. Technically, this would be a second entry short based on the exact counts. But because of the way that these bars printed, you kind of have the indicator that kind of got out of whack. It's calling this a second entry short. So it sees this as a full move as a first entry short all the way up and then down here, first entry short. Then prices come all the way up and down here for a second entry short. And that second entry short fails because prices do not push lower here. Prices continue pushing higher. They're held at the EMA before prices continue on. So let's keep up with some examples here. This is the new low of the swing of prices as they come up, 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 down for a first entry short as it triggers. Then prices continue up looking for a second entry short to trigger. As soon as it breaks the previous low, there's the low. It just broke the previous bar's low. That's a second entry short, and prices continue to hold. So that second entry short fails as prices continue upwards. Now notice you're not always going to get counts either. And this could just be because prices are so far from the 21 EMA, but this is a new low of the swing. Prices come up and down for a first entry short, then prices continue up, 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 down for a second entry short. It triggers on this bar, but there's no 2 there. The indicator does not count that. So there's a second entry short before prices oscillate up and down in this little trading range here before they continue on whatever they're going to do. Now notice there's a new high here, new high, and as price action forms, there's a first entry long, right? New high, prices come down and up for a first entry long. Prices continue down and up for a second entry long. Now let's talk just for a second. Why is it important that we're making these counts? What's the point of them? Well, a lot of people will say there is a lot of psychology behind it. The market likes to move in twos. Prices will try to move in a direction the first time, and when they fail, they'll try a second time. And usually on that second time, prices will work in that desired direction. So just as an example here, let's try and combine some of the things that we've learned. So we have somewhat of an uptrend here. When we consider where we're going to be taking trends in an uptrend, well, if prices are continuing to make higher highs and higher lows, and we're in an uptrend, we want to be looking for reasons to go long. So now we got to ask ourselves, well, when are we going to enter long? When are we going to specifically place our trades in order to start making money in this market? So let's just hypothetically say that we have this uptrend at play, right? Prices are continuing to make higher highs and higher lows. We're in an uptrend. We want to be taking our trades off key entry points. And what does that mean? Well, we have indicators on this chart to help build our confidence in taking trades. There's a reason we have a 21 EMA on our charts. And that's because a lot of traders have found that with that exponential moving average, prices will tend to bounce off that 21 EMA or at some point or another respect that 21 EMA. So as the next bar prints here and we're counting our legs, we have a new high, prices come down and up for a first entry long. Prices continue to pull back in potential trigger of a second entry long. Notice where the second entry long is coming off of. It's coming off the bottom level, the support level of this channel that we have moving up. Additionally, we have this 21 EMA that's continuing to move up. So now we have this area, this key entry point where prices are meeting at both the bottom level of this channel and right off this 21 EMA. And the market likes to move in twos, right? So if we have this new high, prices tried pushing up higher. So people are trying to buy to go long and catch this move. They can't do it as prices continue down. Here is a nice bullish signal bar. People want to enter long above this bar, catch the move to go long. So they're going to put their order either one tick above the signal bar here, because this is a signal bar, or maybe they enter on a limit order. But we'll talk about that in a later video, and you'll see prices continue to take off and you get a scalp. Notice on the right hand side here, this is where the price level is at. So let's just say people entered one tick above the signal bar. They're entering at 37.89. All we need to do is get to 37.90. That's 4 ticks or 1 point in order to make $50 off of one contract. So if people are trying to buy a second entry long off the bottom of this channel, they enter 1 tick above the signal bar. Prices, all they need to do is get to 37.90. And as that next bar forms, they'd be in this trade and out for a scalp as prices continue to move up. So that's a second entry long opportunity where you would have scalped out. And notice that the EMA is being respected by prices. Prices are not pushing down below this EMA. They're continuing to hold. It isn't until prices continue to fall here, this is where now prices are starting to push below the EMA. So what does that tell us? That we're most likely entering a bearish market. Prices are going to continue pushing down. You'll see that's exactly what they start to do, at least for a short period of time before they continue back up. But let's continue on for a few more examples here. We have this new high as prices come down and up for a first entry long. Prices continue down, waiting to break that new high of a previous candle. And there's a second entry long opportunity as prices break above the previous high. And there's the 2 for a second entry long. So not only are we counting off the tops, we also have to count off the bottoms, right? This is a new low. Prices come up, down for a first entry short. Prices come up, down for a second entry short on this bar specifically. So once prices start to break this bar, there's a second entry short trigger. Now continue to count and realize what prices are doing in real time. So notice you have this new low, price come up, down for a first entry short. And as prices come up, down for a second entry short, you think, okay, well, I'm going to take a second entry short right here. If prices continue ticking lower, I'm going to catch the move for at least a point and I'll get my $50. Prices will come down before reversing up, scaring you for a bit, and you'll see prices start to chop along back and forth, and you could potentially get stopped out of this trade. You could enter this trade and end up losing it. What's important to remember is you can't just take trades off of second entry counts. You have to understand what the market is actually doing. So if we rewind just a little bit here, and this is what we're looking at, look at how flat the bars are. They're oscillating up and down in somewhat of a range. Prices are moving from the lows to the highs to the lows to the highs, testing this area. When you're looking at this trading range, we'll go over trading range rules in the next video, but notice if you're trying to sell, if you're trying to short the market and go for a point, you're shorting at the lows of this trading range. Prices are just going to come back up and potentially stop you out. Now, it completely depends on what your risk management is, but you could potentially lose out on that trade. Now, as you continue to gain experience, you'll start noticing different things about the market. And what I mean by that is you'll start resetting the count in different places that make sense. So for example, with this strong move that pushed down, I would be resetting the count right here. Now, is this the highest point at which prices moved in recent price action? No. Technically, the highest high is right here. Prices come down and up for a first entry long. Prices pull back up for a second entry long off this candle here. That's a second entry long. But that's not exactly how I'm restarting the count here. As prices start to break down, what I'm doing is I'm restarting the count here, where prices are starting to move from this 21 EMA, where prices continue to separate from this 9 EMA. So as prices continue down, they come up for a first entry long by 1 tick. Prices continue down, looking for a second entry long. There's a second entry long off this bar right here. Now the indicator is not showing that second entry long, but just for the purposes of this video, that's a second entry long. Now we have to ask ourselves, are we going to take a second entry long here? And I'd argue no, you're not going to take a second entry long here, because you're trying to go long when prices are pushing below this 21 EMA. Prices are supposed to be pushing down. That's what we're expecting to happen. So we need to be staying on the right side of the market. You don't want to be looking for longs when prices are pushing below this EMA. So is there a second entry long there? Yes. Does that mean we're going to take it? No. We want to be taking those second entry longs off of key entry points. or second entry shorts off of key entry points. Now, what happens when we get something like this, where prices form a double bottom? You've got prices that came down to this level here, and they came up, they came back down to the exact same price level. You can see if I draw a little bit of a horizontal line here, we have a double bottom. Now, people will manage these in different ways, but I consider this a resetting of the count. So I don't start the count here and go up, down, first entry long, second entry long here off 21 EMA. I reset the count. This is all zero for me. So when prices come up and down, this is technically a first entry short and second entry short looking for that to trigger below previous bar, and this is counting it as a second entry short. So technically the second entry short would have triggered on this bar here. So that's specifically how to count legs. Now there's a lot more to cover, but those are the very basics. First entry longs, second entry longs, first entry shorts and second entry shorts, and we kind of dabbled, we kind of talked about failures for a little bit. Now, there are a lot of things that we're going to be combining as we continue on with these series, so I encourage you to open up a chart and just practice counting legs off the highs and off the lows. And definitely go back, watch some of my previous videos where I talk bar by bar and I show my counts exactly as they come, and hopefully that'll give you a better idea of how to count. And over time, things will get easier. Again, this specifically will get better with repetition. You just need to take some time to actually practice it. But that's going to be it for today's video. I hope that you guys enjoyed the video. If you liked the video, please leave a like, subscribe to the channel, turn on post notifications so you know exactly when I post this content. And thanks for sticking around. Strive for excellence in all that you do, and I'll see you in the next video.